Welcome to Globefolio. This is the part two of how to trade market crash. So, if you've watched my first video on how to trade market crash, I'm sure you will understand this part. But if you're not, please go back to my YouTube channel to watch the video. So, if you go to my YouTube, you see that on the 6th of this is it, on the 6th of January, I posted a video. 29.9. This is it. How to trade market crash, make money from sell-off in stocks and cryptocurrency. So I posted this video when I saw how that the market was going to dip further as market reacts to global economic risk from the from the possible rate hike, yes, and then other factors. But I think the biggest driver of the market right now is the potential rate hike. The market is factoring in at least four rate hike. So this is like seeing a dip that ordinarily should have happened during the course of the year. They are all happening at once. So that's why I keep telling people to calm down. So you can only take advantage of this dip for a short term, and then in the long run, the market will always bounce back. It's normal. We've seen such kind of such crash several times. So you don't need to panic. All you need to do is to follow people who would teach you, who can guide you on how to approach the market at this time. So in this video, I'm going to teach you how I've traded this crash. Now, I didn't set up this YouTube channel to just be a talker or maybe say what I'm not actually doing or just to talk. No, I want to show you how I am approaching the stock market and also the cryptocurrency market. So this is going to be the part two of how to trade market crash. So a brief recap of what I shared then. I discussed the risk in the market and how that the the stock market and the cryptocurrency market might correct as investors adjust to that risk, and then also knowing fully well that if you are in this market for a long time, you don't have to panic. But if you're in this market for a short time, you can quickly take advantage of the pullback by looking at inverse ETF. So you can go for assets that appreciate, assets that do well in a in the downtrend, down in the market that is trending to the south. So and I mentioned three assets, and then these assets were RMW short Roselle 2008 ETF. I talked about short Dow 30, which is dog, and then you can also buy BTC down USDT. So here I'll be doing a brief recap of how this asset had fared over time. What's the performance of this asset from the time I posted them on our YouTube channel? So we're going to be looking at the performance of this asset in the last 16 days because I posted them on the 6th. You can see on the 6th of January, and today is 22. So what's the performance of these assets that I have shared so far? So that's exactly what we'll be looking at. So the first one is RMW. What's RMW? RMW is the inverse ETF of Russell 2000 index. So Russell 2000 index is an index that tracks 2000 small cap companies in the US market. So the main index itself, the main ETF itself, sorry, is I think IW, I think IWM thereabouts. Yes, let me confirm that. So let's go to our chart. IWM. Okay, so this is it. IWM. So you can see the chart here. You can see how that the market is bloody. You can see this massive sell-off that we're experiencing right now in the market. So this is IWM. Now, if you also watch the video, you will remember that I mentioned key levels to watch out for. This is a resistance right here, and this is a support. And then I also talked about how that a break below this key level would open a huge opportunity on inverse ETF, and that might take this asset down.
you can see that the asset eventually cleared that support region. You can see here, I already have the line drawn. You can watch the video to check how I made a clear analysis of this particular ETF. So you can see that asset eventually broke through 212, and then right now it went as low as 196. So, and I said again that when you see such breakouts like this to the downside, it leaves you with ample upside opportunity on the RMW. RMW is the short ETF. So this ETF moves in opposite direction with the IVM. So what is IVM saying now? Can you see again? I already have my line drawn right here. You can see how we broke that line, and then why the IVM is going down. This has already moved to 23. So from 22, which is the buy point, to now 23. So you can even check from the time I shared it, which is 6th of January around this point. So 21 to 23. So it's already up by 10% when the overall market is down. So this is inverse ETF. This is a perfect example of how to trade inverse ETF. You're taking advantage of market dip for the short term. So this is like hedging against your portfolio. As the market continues to dip, this continues to rally. The moment you see a sign that the market is going to reverse, what happens? You quickly sell off to take profit while your other assets begins to tame its loss. So that is one ETF that I've held since that time. Russell 2000 index. That's an index that tracks the dip or that moves in opposite direction with Russell 2000. So that's RMW. You can do your independent research on this asset. The other one is to short the Dow 30, which is with dog. Short the Dow 30 by buying dog. So dog is also an ETF that you can use to short Dow 30. Dow 30 tracks the performance of top 30 US companies. You can see from the 6th when I posted it, you can see here, which was around 31.5. It has moved from 21.5 to 33. It's on its way to this key level right here. And if it eventually clears this key level, we should be looking at a massive upside. So that is dog itself. You can see the rally from that time. You can see how it has moved consistently to the upside. Then the third one I talked about is currency markets, how you can short BTC itself by buying BTC down. So on the 6th of January, BTC down was selling for 0.014. Right now, it's selling for 0.022. So that's like 8 divided by 14. So it's up by 57%. So BTC down between January 6th and today is already up by 57%. So that's because BTC itself is down. So this is an asset that tracks the inverse movement of BTC. So if BTC is down, the BTC down itself as a coin will go up. So they move in opposite direction. So why are we saying this? The answer is the response is very simple. I think investors are factoring in multiple rate hike. So multiple rate hike should have a harsh effect. Will not come easy. They are going to be factoring a lot of rate hikes that will happen during the course of the year. Now, by the time these rate hikes start coming in later, the market may not dip as we're seeing right now. So this is like all the dip that would have happened in the year happening at once because they are adjusting their portfolio. So if you have been in this market and this is not the first time you are experiencing a dip, it's normal for you to stay off the market for now, pending recovery. But if you are in this market for a short term, you can quickly hedge against your portfolio. Even those that are in the long term too can use opportunity to hedge against their portfolio and then ride the trend as it lasts. So what is happening in the BTC market? So let me share a brief of BTC market with you and how that we could see further deep in coming days. So you can see this is the BTC market. The BTC market had just cleared one important support. You can see after we've had several dip, it always bounce back at this key level. You can see the bold candle here. So this week is already down by 16%. right here. So BTC has just cleared this important support. So the next major support line we are looking at should be around 31, between 31,000 to 29. So this is another key level that we are waiting for. 31,000 to 39. 31,000 to 29, sorry. So this is another key level. So between this point and this point, you can still leverage on this dip. You can still take advantage of this dip to buy BTC down. So you can still take advantage. You can see in the last 16 days, BTC down is already up by 57%. So if you take advantage of this dip, you can still buy more of BTC down. So that's exactly what I want to share with you in this video.